Hey folks, welcome to VerifiedInvesting.com. My name is Gareth Soloway, Chief Market Strategist here. In today's video, we're going to look at a big market drop on the horizon just as the markets get started here. We're looking at tech stocks down well over 1%, the S&P down 1%. And remember, this is coming off some key levels. Number one, the weekly parallel chart that I've shown you on the S&P 500. We just tagged it last week and could not get above it. Rejection signals downside in the market. And remember, just a few days ago, I put out a video on my channel here that showed you the SMH, the Semiconductor Index, was 102% on the weekly chart above its 200 moving average. That's the same distance as it was in 2024 when it dropped 40%, and 2021 when it dropped 45%. So again, there's similarities, signals of imminent danger in this market. It looks like we might be starting a correction. In addition, Palantir earnings, they came out with beats on the top and bottom line. They raised guidance. The stock is still falling nearly 10% because of valuation concerns. Listen, at a certain point, things get way too pricey. Unless they're going to cure cancer, as I say, there's really no way these stocks can continue to go up. So let's take a look at some things because we have some other big factors here. In fact, let's start with this one, folks. This one is a big one. So if we take a look at this chart, this is the repo market from the Federal Reserve. The repo market is the borrowing window for banks where if they get in trouble, they can borrow money by putting up treasuries as collateral from the Federal Reserve. Look at what's going on here, folks. Look at this huge jump, huge jump in the repo facility here. Look at just in the last couple days, the huge jump on Friday, $29 billion borrowed. And in fact, this one shows you with everything included, it was north of 40 billion. And then yesterday, north of 20. And look at all in November and late October, all the borrowing that was going on right there. That is huge, folks. That is absolutely huge. It tells us that that banking fear that people were having a few weeks ago when a few banks reported issues, that is absolutely an issue here. All right. Notice again, when we go back to this chart, look at back. This is a year chart, right? So literally in July, there was one jump in borrowing. Before that, there's literally nothing going back a full year. And so the fact that we're seeing so much borrowing here in November and the spike, that is telling us there is trouble in the debt markets. I repeat, trouble in the debt markets. Now you compile this with the technicals on the S&P, the SMH extension above the 200 weekly moving average, as well as Palantir's earnings, where they were very good, but valuation is causing an almost 10% sell-off. And we have a recipe for a correction in this market. Let's take a look at some of the charts here that we want to go over. If we jump into it, this is the S&P here early in the day. This is the futures. You can see this was yesterday. Institutions. I've talked about this, guys. This is institutional selling all the way down. I mocked it up yesterday, but you can see again, yes, 2 days ago going in, or I should say on Friday, we had the early sell-off. The institutions stopped selling here because the volume gets too light. Once they stop, markets go back up. Yesterday, they started selling at the open because volume was there. They stopped right here. Markets floated back up. Overnight, the fears percolated, and now the futures are dumping out. We did get a little bounce here in the futures going into the open, but this is significant. Now, if we go to the S&P 500 chart and we go to the weekly, this is what I was just talking about early in this video. This S&P parallel, folks, amazing. Right back here, we have the low from the COVID collapse, March 2020, the bear market lows, subsequent pivot lows right here, and then the liberation sell-off lows when Trump imposed those crazy tariffs. All of these guys gave us this trend line. Right here, we have the parallel, right? Bring the parallel up. Why am I putting it up to this level here? Because this was your bull market high in 2021. Look at where we are, folks, right there. Look at last week. The weekly candle was above it, closed below. Yesterday, we opened above it and closed below. Today, we're trading below it. This implies, look, every time you hit the low end of this chart, we get a move up. We get a move up, right? We get a move up. And then when we hit the high end, what happens? The likely scenario is a big pullback to the downside. And then let's flip over to the SMH here. Let's bring up the SMH chart here. Let's go to the weekly, and I'm going to throw on my simple moving average. Okay, so we'll look at moving averages. You can watch me do it here as well. Simple moving average. We're going to flip it over. I'll show you how you do this here on this. Number one, I hate blue because it doesn't pop out. I like it to be bigger. And then we're going to flip it over to the 200. We're going to put the input at 200. This makes it a 200 moving average. Okay, and if we do that, then you're looking at this chart, which I just did a video just on a couple days ago. And this is an incredible video because if you look at this, here was a bull move off the 200 weekly. Here's your highest point, right up here. If we do a plumb line, if we shoot a vertical right up, look at this, guys, 102% extension and then the big correction. If we do it right here, here's your highest point in 2024. Align it perfectly, bring it right there, and we go up. Look at this, 102%. And then where were we last week at this high? We do an extension move from that moving average right up. And what do we get? 102% to the highs last week. What does that imply? It implies the semis, again, moving averages work like basically boomerangs. They can only go so far before they come back. Or rubber band. Stretch a rubber band, you keep stretching it, you stretch it. At some point, it snaps back, right? It breaks or snaps back. And that's what moving averages do. They pull price back. And so the idea here is very simply pull back, right? And the idea here is we should get a pullback, could be as much as a 40 to 45% pullback on the SMH, which would tell us that probably NVIDIA drops 40 to 45%, AMD, all of these other players, Broadcom, could drop significantly as well. Now, this morning we do have a few earnings out there. Let's take a quick look here. Earnings on Uber dropping here. They actually had decent numbers, but again, you look at charts, and in general, this has been trending up. Look at the trend on the daily chart from 2022. So their earnings just not enough in this market environment to justify upside. They're coming down. All right, other names to report. Pfizer. Pfizer is down a little bit on earnings here. Not a big move by any chance. You can see it popped initially, came back in. I continue to like this because it's a defensive name. They actually beat and raised guidance, but again, in this market condition, it's down. But ultimately, what I like about them is they're paying out a big dividend this coming Friday, or at least of record holders. You'll get it, I think, in December. But again, 43-cent dividend, defensive names. This is where I'm looking, right? And by the way, one other crazy thing. So number one, Michael Burry picked up Pfizer. Number two, Michael Burry just released his top holdings. 80% of his portfolio is in Palantir puts and NVIDIA puts. Think about that. And for those of you that don't know what puts are, that's basically an options contract betting the stock is going to go down and you make exponentially more. Basically, what he did in 08 to make his name, where he bet against the market and essentially the debt markets and the collapse of the financial crisis, where he was right. He made a ton of money, and it looks like he's doing that again here with NVIDIA and Palantir. So just a heads up on those. So these are all big events today. I wanted to bring them to you guys first here at Verified Investing, or at my channel, where I obviously am with Verified Investing. If you found this interesting, please share it with friends and family. Again, technical analysis is the #1 way to find the right outcome. It's not perfect, but it's probability based. That's the key, folks. You guys have a good one. Thanks again. Take care.